All right, I have selected 42 IPO stocks from 2019, and there was over 1,000 of them, so I had to whittle them down. So you're not going to be seeing any spin-offs like Mobileye or KNF, any stock that has been a spin-off. I had to not include, even though if I liked them or not, I just am not going to. I'm just not going to include them. It'd just be too many stocks. This is GE Healthcare, obviously General Electric. Mobileye is an Intel stock. KVUE is Johnson and Johnson spinoff. Not doing too well yet. Still going through its due diligence phase. CEG Constellation is a spinoff from Exelon, and CRBG is an insurance stock, which is an AIG. Some of these stocks I really like, but I'm not going to include them because they're spinoffs. I'm also not going to include stocks that I like ELF, which is prior to 2019, although I do like it a lot and own it. And Celsius Holdings is another one that I recently bought and that I like, but it's too old, 2017, even though it's only 7 years. Celsius, it's been around a long time, but they just came public in 2017. And then also the ones that are too big are like CrowdStrike. They fit the criteria, but they're just a little too big. A $60 billion market cap. Zscaler came out in 2018, so it's too old, also too big. Uber is another one that I will not include due to its size. Roblox, too big. It's a 28 billion market cap. But these are some of the ones that I like that are just too big, too old, or spinoffs. So I just want to throw that out there. I do have 42 stocks, so get your pencils ready. I'm going to start with AI. This is an AI new bull market or new uptrend with AI as the theme. So I included this one, even though I don't really particularly care for it. I like the CEO, Tom Siebel, but and it doesn't have the growth profile that I'm looking for with the sales. It's got 0, 11, 17 accelerating sales, no earnings yet. So maybe once a couple more quarters go by and they start doing a little better, I might get more interested. But it sure has been a decent stock, especially in 2023. It was a fine stock. I'm going to go kind of fast. I'm not going to go through these in too much depth. So you can write the tickers down, do your own due diligence. This is a firm. I'm trying to hit grand slams here. I know I could buy Apple or Microsoft or Nvidia and do pretty well, more than likely. But I want to hit some grand slams, and you're not going to do that with $3 trillion stocks. So I'm going to try to find something here as a firm. When this one came out, it was a rock star, and then interest rates, Jay Powell started raising rates, and all these speculative new issues, they all sold off like 85, 90%. They have the same profile. 2020, they're rock stars when the Fed was at zero rates and shoveling money, and the administration was just throwing money at the COVID problems, and then the rising interest rates in 2022. We had a nasty bear market. But now a firm's coming out of it. There's your cup pattern, broke out, formed another base, and has really been ripping recently. It's definitely getting support at the 10, and on Friday pulled back to the 10. So if you didn't get it out of the base, maybe a firm's offering you another chance. The heavy short interest in that one. AppLovin, another one. I don't know a lot about these software names, but the same profile. As soon as the Powell mentioned that he was going to, or he signaled that the interest rates were raising, these things all have the same profile, just like a water slide there, a severe ski slope, a ski jump, and then this one recovered, and now recently has formed this little consolidation here, which I kind of like. I've actually had this on my ready list recently, but it hasn't broken out. You can see this consolidation going way back to August. Okay, so it's been 5 months of just consolidating, so it needs to break out. That's AppLovin. Array Technologies is a solar company. Solar might make a comeback here in 2024. Had a rough year in 2023. This one, same profile. 2021, just came crashing down. Actually consolidated sideways in 2022, in 2023, I should say, and now has pulled back as the solar's been really hit. But this is one, you got to take a look at the, the fundamentals. It's got pretty good sales growth, although it's decelerating, and they have earnings. So that's something that I do like, is earnings and cash flow, return on equity. So Array is not bad. Another one is ASAN. This is Dustin Moscovitz's company, and he's been buying a lot of shares. Similar profile to the rest of them, ran up during COVID. And then as soon as Powell said he's going to raise rates, it sold off like the rest of them. But this guy's been buying the stock all the way up and all the way down. He's still buying it. So he's definitely got enough money to buy the whole company. It's only a 4.2 billion market cap company. So a lot of room for growth there. I'm sorry if I'm going quick and not covering these things, but I have 42 of them to get through. And it's just a lot. This is BridgeBio. And for a biotech stock, I don't know why I included this one. Why did I include it? Well, it looks pretty decent there. It's got accelerating sales, market cap of, oh my gosh, it's 7 billion. That's a pretty big company. Anyway, no debt, which is a surprise. Why did I include BridgeBio? It's got the same profile as the rest of them. Ramp up in 20 and then come down in 2022 and then flatten out and recover in 2023. It's got a nice little, it's consolidation here since the middle of summer, and tried to move out and pull back to the 10 on Friday. So not bad. They must have something that, something in the pipeline. Anyway, I'm going to move on. A lot of people do not like biotech stocks. They're very explosive and implosive. This is Bill, BILL, and this one came to market during COVID, I believe. Yeah, 2020, and just was a rock star. This one ramped, as you can see on the monthly chart. Then, November 21, imagine that. As soon as Powell signaled he's raising rates, this thing just sold off. Not really recovered yet either. Bill's got what about 1.2 billion in sales here? It's got earnings and sales. It's got a market cap of 8.7 billion. So yeah, it's a little expensive still. Bill, I'm going to keep an eye on Bill. They're a software name. I don't know exactly what all these companies do, to be honest with you. BMBL, this is one of these hookup sites. I don't know what they call it, a dating app or whatever. But this one is in a clear downtrend. Now it's trying to form a bottom here. It's got decent sales here. And it's got earnings, 2 billion market cap. Yeah, it's not an expensive stock. I don't know. We'll see. Do people meet online through dating? I don't know anymore. Anyway, Bumble, BMBL. All right, Bros. This is one that many of you have heard of. I like Bros. They're spending a lot of money though, to expand. And so, it's just like growing pains, right? This one was a rock star until, the interest rates went up and the multiples went down, and it affected all these young companies. And this one's trying to grow, got a lot of debt here, as you can see, but it's got cash flow and return on equity. They've got earnings. They got, good sales. I like Bros, and I like it for 2024, even though they're spending a lot of money. I think that's going to start to pay dividends here. So, it's only 4 years old, so you got to give them some time. 4 years as a publicly traded company. Hey, Bros is a good one. I am going kind of semi in alphabetical order. DUOL, Duolingo. This one came out right before the interest rate started raising, and this one still looks pretty good to me. Obviously came down 2022, consolidated, and had a great year in 2023. If I could just go here to this 218%, yeah, not a bad year. Broke out of a base here and has just been climbing recently. If I go to the daily chart, sorry for skipping around so much, but you can see here it's being supported by its moving averages. So I don't own DOL, but I do like it a lot. Some of these stocks are performing much better than others. This is DigitalOcean. Once again, a software name. I have no clue what they do. They were growing in the 30 percentile, and now it's down to the teen. So that's not a good trend. They have to have accelerating earnings, but I mean sales, but they do have good earnings. And they're going to earn, $1.53 this year and $1.46, $1.48 next year. So these are just estimates too. So I don't know what's $1.50 of earnings worth. I guess $36.69. But DigitalOcean, not a bad company. Doximity is another one that was a rock star when it came out, and then we know what happened. Same profile as most of them, and just can't get out of its own way here. Stuck below the 200 there, so maybe it gets above the 200, it can fill this gap, which is up to $32. So we'll see. Docs is software medical company. 5.2 billion market cap with a 36 PE, so kind of rich. Okay, DV, which is a double verify, computer software stock. You can see this one came out in 21 and sold off like the rest of them, consolidated. Looked like it was really going to go, and then that must have been an earnings report. We're just crashed and burned here. Oh yeah, not good. From 42, and then it traded down to 31 in a very short time. Formed this base though, and it's looking a lot better. Actually, I kind of like the looks of that. Got accelerating sales growth here. Market cap of 6.2 billion. It's got earnings, double verified, not bad. Like I say, I'm looking. If you're looking for grand slams, you're not going to find them in Apple and Microsoft. These are some of the names that could have bright futures. FLNC, this is one that my friend bought recently, and she really likes it. I don't know much about it, to be honest with you. 44% short interest, so somebody thinks it's going down the tubes. It's got earnings and it's got sales. She's a fundamental person, so I figured it must be pretty good. And yeah, I could see why she would like that. Nice consolidation here. Had an inside week last week. FLNC, pull back to its 21. That looks pretty good, actually. Okay, FLYW. I'm going to pretend like I know what this one does. Finance, credit card, payment stock. Business to business sectors. Okay. Anyway, it's got a 2.8 billion market cap, and it does have earnings, and it's got sales. Not bad. Sold off like the rest of them. I mean, they all pretty much look like the same. Start off good, then sell off as the rates go up, and as rates are starting to come down in 2024, they're going to recover. Some will do better than others. FOUR, this is a stock that I did own for a while. I like this company, but can't get out of its own way here. FOUR, you can see it was a rocket ship, sold off, and now it's kind of consolidating, going through its due diligence phase. But once it hits its advanced stage, if it hits its advanced stage, where the institutions start buying, that could be a big mover as well. That was 4. How about FRSH? FreshWorks. I know there's Fresh Pet and FreshWorks. I'm just going with FreshWorks, another software with a 6.9 billion market cap. Decent sales, a little bit of earnings. Got to pick it up, but definitely one to watch. I think this is it got a nice little pattern here, and then it broke out and pulled back to its 10. So FreshWorks looks good on a few different time frames there. Frog, a lot of you have heard of this one. Broke out recently, just traded sideways. What is that? 2 weeks tight. Okay. A lot of stocks are showing 3 weeks tight, but Frog definitely one to watch. 3.6 billion market cap. It's got sales and earnings, so one to watch. ESTC, this is one that I bought and I like a lot. Because if you're into AI and believe that this next uptrend or bull market, or whatever we want to call it, is going to be AI driven. This one broke out of a base here. You can see this big cup with handle broke out. Now it's formed a 3 weeks tight, which should be an add-on buy area, but we'll see. The market's got to cooperate. This is 11 billion market cap. It's got some, earnings chops and some sales. This is a really good company. One that I do like a lot. Same with this next one here. This one broke out recently as well. So these could be entering their advance phases here. After the big sell-off, it goes through its due diligence phase. If they start entering their advance phase, these could move rapidly and be big winners, these last two here. But I like ESTC and GitLab. How about Hood? You guys have Robinhood accounts? I don't. Few of my friends checked it out and then they weren't impressed with it. Big sell-off, big consolidation, still in the due diligence phase. I don't know. I mean, if it gets into its advanced phase, could be a big winner as well. Looks like they're expecting to go from negative to positive earnings next year. Definitely got quite a bit of sales here. Yeah, a couple billion in sales with the 11 billion market cap. So I don't know, 5 times sales. I've seen worse. Harmony is another biotech stock. This one has earnings though. They're expected to earn $5 next year. Yes, accelerating sales growth. Harmony looks pretty good to me. Definitely just been consolidating for a long time and been in this due diligence phase. So it needs to hit its advance phase. It was a $60 stock not too long ago. So keep my eye on this one. Try to keep an open mind, even if it's a biotech stock. They have a failed phase 2 or phase 3 trial, then you're out to lunch. Anyway, this one you could see obviously going through its due diligence phase, and now it looks like it's breaking out to its advanced stage, institutional advanced stage, quite possibly. This is Informatica, INFA. A pretty strong sales profile here. They did 400 million last quarter. Provides an AI platform. I got to be honest, I don't know what all these companies do. It's got an 8 billion market cap. So write that one down. IoT is another one that's been really strong. You could see it came to market kind of at the wrong time, right at the end of 21 and just sold off. Looks like it went through its due diligence phase and now it's in its advanced stage, in its institutional advanced stage, and it's just consolidating in a base here. That's got to be a 3 weeks tight pattern, right? Yeah, 3 weeks tight. And actually last week was down 1.85%. As it pulled back to its 21, that one looks really good. That's IoT or Samsara. Another one that I really like is MNDY. This one came out and was a rock star immediately, and then of course went through the downturn, went through this due diligence phase, and looks like it might start its advanced stage. We'll have to wait and see. That's another one that's 3 weeks tight here as it forms this long period of consolidation. It's really a base on base pattern. That one looks good as well. That's MNDY. NU, I don't know much about this. I know people really like it. It's a Brazilian bank. It's an $8 stock. You could see clearly it sold off and then had this due diligence phase, and then it started advancing and got in this consolidation. Well, I can see why you like that one. 3 weeks tight as well. Yeah, that's more like a flat base. Anyway, that one looks pretty good. NU, yeah, another solar stock that came to market last year, I believe it was NXT. When did this come to market? Oh, February 23. Okay, that's a really new issue. And solar's been hit hard this year, but this thing's just forming a base. This one looks pretty good. Next tracker, NXT. And it's formed this consolidation for a long time since July and pulled back to its 10 here. That one looks pretty good. Pretty strong sales here. Accelerating sales 18, 19, 23%. Yeah, and what's the market cap? 2.9. So this is like one-time sales. That's a cheap stock. Inexpensive, I should say. People get upset. What do you mean it's cheap? This is on holdings. This is one that I do not particularly care for because footwear is just a really tough business and people are finicky. And if you remember LA Gear from the 80s, really hot for a short period of time and then it fell out. I own these on holding shoes. They're pretty good shoes. I traded this stock for a little bit, but I don't like the way it trades. I know a lot of people really like it on Twitter or X or whatever you call it. Pretty strong sales here, but like I say, footwear is really finicky, and they don't get afforded really rich multiples. So yeah, this is what they got, about 2 billion. I think they're expected, 3 or maybe even 4 billion next year, and an 8 billion market cap. So 2 times sales with decent earnings. But yeah, I'm just really careful with footwear stocks. Like I said, they don't get big multiples. Path is one that has been very strong as well recently. You can see the big sell-off, the consolidation. Now this could be moving into its institutional advancement phase, pulled back to its 10, and that looks good. That's a UI path. Develops robotic automation to eliminate to the need for employees. Oh, you're going to take our jobs, are you? It's got a 14 billion market cap, so it's not a small one. PCOR, don't know what these guys do. I don't know why I included it. It looks like it's just going through its due diligence phase. Oh, it's got decent sales here and their earnings. That's why I included it. Almost a 10 billion market cap. Wow. Okay. This one here, I got to point out this. When you see a stock with 71 million shares in the float and a total of 143 million, somebody's holding the shares, and it looks like management owns 40% of this stock, and they can sell stock at any time they want, right? So yeah, you don't want them dumping shares on you. I would stay away from this one. I think that's why I included it. That's something to definitely point out. Uh, Procore Technologies. Yeah, you don't want management owning a ton of stock because they are going to sell at some point. Got to put gas in the yacht, right? RELY is another one that I like. It's it's got decent sales, but it doesn't have earnings yet. Heavy short interest, and you know how those stocks with heavy short interest have been performing well lately. This one's not. Looks like it's just going through its due diligence phase. RELY. I gotta pick it up. Sentinel-1. This is one that I really like. It's in the cybersecurity space. 8 billion market cap. Real strong sales growth. This one's probably going to do well in 2024. SDGR is Schrodinger. This one was a rocket ship as well, like everything else in 2020. And there you go. And then sold off, and now it looks like it's just going through a due diligence phase. I'm trying to get through these. I have a lot more to go still. Taskus, that was a rocket ship as well when it IPO'd and then sold off, and looks like it's just going through its due diligence phase as well. TMDX is one that I really like. They save lives. The organ transplant company IPO'd in 19. Yeah, and then it really was a really strong stock. Sold off recently, I think, on earnings or whatever, but it's recovered pretty much most of that damage. Really good company. Unity, another one that I like. Computer software design. This is in with believe like CDNS, yeah, and Synopsys, Cadence and Synopsys Group. Strong sales. No earnings yet, so we're waiting on that. But Unity, definitely one to watch. TOST, this one is kind of like FLYW in 4, right? With the restaurant, right? And people eating out, they should be using their cards. Anyway, this one came to market at the wrong time, sold off, just going through its due diligence phase. Upstart, we know what they do. These are the Google execs that left. Was a rocket ship until 2021 when everything else sold off. Heavy short interest here. You definitely have to watch that. Recently, it rallied up to like 72 area. Right there it is, 72, and then sold off, I think, with an earnings. Yeah, that's decelerating earnings, and that company, that stock is a mess. VERX. This is one that's been really strong. software company. 4 billion market cap. You could see that nice consolidation there. Nice little IPO base. This one looks pretty good. Once again, though, 56 million in the float and 153 outstanding. Definitely something to watch for. With that one, XMTR. This is one that was going to put on my ready list recently, and I missed it, and it just took off. This one really took off. Looks like it's going into its institutional advance phase here after the due diligence. This is definitely one to write down and follow. Machinery stock looks good. And the last couple I have is Zim, the shipping stock, which was a rocket ship. We traded this one from like 20 and then went up to like 90. Yeah, it was almost like it was like a four bagger, like from 25 to 90, and then it just sold off. They were making money and now losing. So that's the way it goes in the shipping business. And then Zoom. This is the one to watch. I know a lot of people hate on it. It was a rocket ship and then sold off with, of course, during COVID and everything, people were zooming. But they have a pretty decent balance sheet here for Zoom. It's real strong. I mean, they're doing more than $1 billion a quarter in sales. So they're doing about, 5 billion, and it's got a, what is it, market cap 21. So maybe I shouldn't have included this one. It's over 20 billion, but anyway, I did. And there you go. That's it. Except for an honor of the great Steve Jobs. I have one more that I want to show you, and that's VRT, which kind of came to market as a merger, I think, an acquisition, and Dave Cody from Honeywell was involved. And I guess that's what this is. I don't know. But anyway, I'm only concerned with what it's doing recently. And you can see recently, this one has been really strong. It's a data center play. They have really, top end technology, and you could see how this one has just been a monster in 2023. Breakout, move higher, and then consolidate, then move higher. If I go here, it'll tell me that it was up 251% in 2023. Yeah, that's not bad at all. If you want to look at the daily and see how do I get into this thing, there's there's the breakout, the move higher, consolidation, pullback during the correction. And then since the market's been rallying, it's been rallying with it. Pull back to the 21 one time. So maybe that'll be a place to get in. But this company has got sales growth, earnings growth. This has got the profile that I like in a stock. Anyway, that was a long video. There was a lot of stocks, a lot of ideas. Some of these ones are going to be complete bombs and die and go out of business. Others are going to be some winners. So got to do your own due diligence. Thank you for watching at mcstockcharts.com. We never give up.